So this morning, I want to talk a little bit about inflation. So if anybody turns on the news, the first thing you're going to hear about is the war in Ukraine and Russia. You're going to hear about inflation and that, numbers are looking down domestically and starting to increase internationally. But inflation is tied into all of that where we've all been, the last 2 years. So today, inflation is estimated to be 8.4%. So I talk to a lot of people that say, "Oh, I'm making I'm in an index fund or I'm in a mutual fund. I'm happy with my rate of return." Well, your rate of return is probably not what you expect it to be. So if you had an index fund and you were tracking the S&P 500, here's the numbers. For a 12-month window, so April of last year to April this year, you made 15%. If inflation is 8.4%, you did make 15%. And so if you cut those numbers in half, you're looking at somewhere around 6 or 7%. Then if you made any form of transaction, if you bought or sold or traded stock, you also had to pay taxes. So if you calculate the inflation, the taxes you made, if you made any form of trade less than 12 months, your rate of return is not what you think it's going to be. So how does that equate into, oil and gas? Well, you're very similar to stocks. You're wanting something that can produce a dividend or have appreciation. So oil and gas is very similar to real estate. You want a quality property that can produce a monthly income for years and years to come. So yes, it is tied to the price of the commodity. So when oil goes up, so does your checks. And when oil goes down, well, so does your checks. But if you're happy with a 10% rate of return a year and then inflation on top of that, you might really find some benefits in oil and gas because you can really make a lot greater rate of return, save a bunch of money in taxes, and have a cash flow stream that lasts for years to come. So I'm not saying do one or the other. I mean, I've got a very diversified portfolio myself, and I have a large stock portfolio, but there's room for both. All of a sudden, you're in a recession, and price of oil and gas is still $100 a barrel, and your account, you're at a negative rate of return for the year. Well, your oil and gas portfolio could potentially make you 30 to 40% a year. And I know that sounds crazy, but that's because of the price point. Number one thing, and I've mentioned this a few times, find a great long-term cash flowing asset, and it will stand the test of time. Hit like, hit subscribe, and stay tuned.